Hi, everybody, and welcome to another episode of Meet the VC. We're in series two, and today we have Clay Gordon from Stout Street Capital. Hi, Clay.
Hi, good morning.
Good morning to you. Well, it's actually the afternoon for me because I'm currently in the UK, so I'm a little bit later in the day, but good morning to you. Um, Clay is the co-founder of Stout Street Capital, and I can't wait to hear more about you guys and what you've done. But Stout Street Capital is an early stage venture capital business, and I believe you've done around 65 investments. Again, like I say, it's generally around that at those early seed stage kind of check sizes, around 250K. And you're also, and I read this sort of over the past couple of days when I've been doing my research. You also have these unmet conferences, which I'm really excited and interested to learn about as well. So today, what I'd love to do is just hear a little bit about you and about the journey to Stout Street Capital, and a little bit about Stout Street as well, and then we'll move into the general questions.
Yeah, well, I appreciate you having me on. Pretty excited. Yeah, a little background on myself is born and raised in Denver, Colorado. Got my education here as well, and then took a little bit more of a corporate job post college. I was on the East Coast for about 4 years, and then ended up coming back and wanted to get into the early stage venture scene. I had worked at startups in college and worked at a family office that had a good amount of exposure within the space as well. But we decided to launch a fund in 2017, and that's kind of evolved into Stout Street Capital. We've made probably closer to 90 investments since
Wow.
2017, raised three
Apologies.
funds, and then started some venture conferences to support companies getting access to institutional capital from around the country. So yeah,
Oh.
it's been a great ride.
Yeah, and congratulations on that. And my apologies that I stole 25 of your investments there by
Yeah,
saying you've only done 65.
yeah, all
Yeah,
good.
so but no, that's really really good. No, it's fantastic to have you on, Clay. For a number of years now, we've been working within these ecosystems of founders, funders, and subject matter experts, and constantly what we get from our founder community is a constant thirst for knowledge and trying to understand how you guys work and live and are and the effect has been fantastic, through season one and season and into season two now of the podcast. What we've been able to do is speak with investors from kind of the really small tickets, sort of 20-30K startup pieces, right the way through to $100 million checks. And I think what's been really interesting is that we're able to kind of give some insight, really, and to find that leveling up point, because I think that that's the biggest challenge. I mean, I don't know what your thoughts are as well, but in terms of it feels sometimes like where we sit or where I sit in this process, I've got lots of friends who are investors, just like you guys, and I've got lots of friends who are founders, but it seems like sometimes people are coming in like this. And I guess what we're trying to do is kind of level up some of that information, that knowledge, to try and get that connection. And so I'm really really happy to get you in and to learn about the how this journey has gone for you.
Yeah, for sure. And we definitely want to be accessible and available to provide as much information to startups as possible. I feel like the biggest thing, to your earlier point, is just there's so many different types of VCs,
Yes.
from coastal VCs to non-coastal VCs, and then kind of where we sit in the capital stack, I would say is quite different than our peers. But we really like the risk profile that we're investing into, but it's going to be just a slightly different flavor than maybe our peers as well.
Yeah. Yeah, I can't wait to hear more about that. So let's kick this off then. Could you share a personal story or experience that has had a significant impact on your career as a VC?
Yeah, I mean, I think it's got to be the startup that I was working at in college. It was a fulfillment company that stored, sell, and sold, as well as shipped products for other e-commerce businesses, and so kind of did everything except for manufacture or
Yeah.
aggregate the product itself. And it was very interesting to see the full life cycle of taking a product to selling it online to selling. But this company ended up taking a large investment and was able to double the size of the company, as well as drastically expand the growth of the company. And I was at the startup during that time, and I really got to see what startup funding did internally within a company. And it was really interesting. I mean, it was great to expand the company and get to meet some more peers, but ultimately just add to our value prop for our customers as well as our stakeholders was very exciting. And so I feel like that specific example really launched to, hey, there is something here where a little bit of investment can double the value or the output of the startup. And so we wanted to lean in on that as well for our thesis.
Amazing. And so obviously you've had a career before this career, but what motivated you to become a venture capitalist, and what keeps you passionate about investing in startups? Because I wrongly said 65. It's actually more like 90. I mean, that's actually like that's really kind of industrious levels of investment. Like you guys are really going for it. So, what keeps you motivated to do that?
We've always, a couple ways to unpack that is we've always had a larger portfolio. We do expect some failure as part of the model investing in early stage companies, but ultimately, going back to my previous career I was really supporting or small businesses as I had worked at a political nonprofit, and I feel like we've always been championing the little guys. And then moving towards Stout Street Capital is just a little bit more on the for-profit side, trying to help catalyze founders' visions to a success. But I feel like always working with the entrepreneur has been very fulfilling. Working with someone with their passion is just really, really rewarding. But I feel like we want to offer a different product to our LPs, a way that investors think about risk. And I think that's, again, where we are different. But we wanted to create a slightly different product than more traditional VCs. And so we just kind of want to go out and kind of prove that we don't need to put capital at risk unnecessarily, but still having enough upside to make venture returns. And again, this kind of falls within the capital stack, but we want to see companies in market with a little bit of proof points, but still early on. We feel like this is a good value prop to our investors.
Yeah. And that's a really interesting point that you make about the reduction in risk, because I guess some people might look at this from the outside looking in and think, these guys are doing a lot of early checks, they're putting money into a lot of early startups and multiple investments. So how are you actually reducing that risk? Like, how do you do that?
Yeah, I mean, we want to see that through, I would say, customer validation of the product. Ultimately, we want to see companies with a little bit of proof points prior to scaling. Again, this is still seed stage. These are startups that are going to be far from what they will become in 5 years. But ultimately, how can you mitigate risk prior to putting capital at risk?
Yeah.
And so the way that we've validated that is through customer validation.
Love
Round
that.
size is another portion as well. So in Colorado, there is more, I would say, scarcity of capital.
Yeah.
Really, when you leave Northern California, New York, and Boston, there's a big drop between the fourth biggest market in VC funding, and then Colorado is actually fifth. And so even for the fifth largest VC funding in the country, there's still a lack of capital within the country. And so ways that we can mitigate risk is through round size. And so we want to see companies with early customer validation with a $2 to $3 million round size, which we feel like is sufficient to put enough fuel on the company going into a seed round. And we feel like we've done a part of the risk mitigation prior to putting capital at stake. And if we do that 30 to 40 times over, then we have a pretty good chance of succeeding. Or that's what the data is showing us.
That is, I mean, it sounds so simple when you say it that way, but the customer validation piece is so important, because if the customers love it and they're telling you that they love it, then that's always going to be an amazing opportunity for an investment. And so, I completely get it. And I appreciate that. Good. How do you approach building relationships with founders, and what qualities do you look for in potential investments?
Yeah, I say one way that we try to build relationships prior to making an investment. I feel like anything, it's there's a period of getting to know each other to see how people operate, to see if it makes sense for a good fit. And so, ways that we've done this is we try to support local events around the country. And so, one that we did recently was the Third Coast Summit. It was actually down in New Orleans. We were a community sponsor for the event where we helped attract startups, investors, and sponsors to the event. It was great, but we ended up building relationships with startups that we're tracking now in hopes to fund them down the road. We've done this with accelerators and incubators around the country for a number of years, and it's just a touch point with companies that's not a solicitation that helps start the dialogue before a seed round comes up. And so that's been a helpful way to get some validation on the back end. And then I would say qualities that we look for in investments are unique value adds to existing markets. And I feel like the simpler way to identify that is, are you driving revenue or decreasing cost to a larger business? And so these are ways that we feel like the product is going to make it in the long road. And then part of it is the founder a product market fit? And so does the founder come from the industry previously? Does it make sense for this founder to solve this unique problem set? And I feel like those have been good ways for us to identify the right team. Ultimately, everyone's looking for grit within a founder, but it's really hard to quantify that. I think everyone has a gut feeling of this person has the tenacious spirit that you're looking for in an early stage founder, but being able to quantify that is much harder, and it's different from VC to VC as they evaluate it. But we're just looking for some kind of proof points on that, and we feel like if you can go from 0 to 1 or 0 to early customers, then you've already pushed the company through probably the hardest time, and that's enough for us to validate the grit component.
Yeah. Yeah, I mean the grit is always something that gets talked about. But one thing that really stood out for me in the last kind of segment there that you talked about was I think you said, are you driving revenue or decreasing cost for your customers? I think that's a great way to look at it, because if you're doing either one of those things for your customers, then you have a business, right? Somebody's gonna pay for it because you're showing that value.
Yeah, and I've always kind of identified us as more as like early stage investors. I mean, the VC has this profile that I think everyone kind of looks up to, but I feel like if you demystify VC and kind of rephrase it as early stage investor, then it simplifies the investing period. And so when I had alluded to increasing revenue or decreasing cost, I think it demystifies or simplifies the investing process.
I agree. I agree. I agree. I think, and I love that. I love that distillation that you're doing there. Can you share an example of a startup that you've invested in and how you supported their growth beyond just financial backing?
Yeah. So we are a national investor, and I feel like we really leaned into building relationships nationwide, and that includes on the LP side as well. But one specific example is a company called BlastPoint. They're based in Pittsburgh. It's a geospatial data analytics school. It's just a really, really cool company by some technical founders. Anyways, we invested at their seed stage. We really liked the data set that they were providing to their customers, which was utilities and credit unions. We had a great relationship with a credit union-backed fund called Circle, just a great team out of Iowa. We were able to facilitate that introduction that led to a term sheet, and so Circle ended up leading BlastPoint Series A, that we facilitated that introduction, and that is a strategic connection on the investor. And so this is a Colorado fund investing into a Pittsburgh company that made a connection to a strategic fund in Iowa. This all came from our kind of national footprint. And then I'll give one more example on the LP side. We invested into OpenTug. It's a seed stage water or maritime company based in Seattle, but we have a strategic LP in our fund that's a perfect customer for OpenTug, and given some confidentiality, we can't give into the specifics, but we recently made this connection that was really exciting for the company, and so we're excited to see how that plays out on the customer side.
Yeah. Yeah, and I think I think that's so important, that the more, I mean, we probably speak to between 20 and 40 founders per week. All of them are looking for investment. What I would say genuinely is, we're getting this on a, I think it's increasing by the week. Like every week, there's more and more of this. But I think that founders are looking for these strategic investors. They're looking for investors that are going to add some more value. I think that founders see the value of great investors in terms of their networks and their black books and who they can connect them to as well. And whereas kind of 2-3 years ago, it seemed like everyone just wanted the money, it does feel now like people want, a bit of extra support and a bit of that extra kind of, support, I guess, within their business.
Yeah, I feel like there's a couple different investor profiles out there, but I feel like there's the investors that are hands-on, and then the investors that are a little bit more hands-off. And as soon as you say hands-off or passive, I feel like there's a negative connotation. But when you get into the practicality of taking on investment, I think a lot of founders, at least at our stage, are looking for a network, and to a certain extent, they don't want to be micromanaged, and so they appreciate that we can offer a network that they can tap into, but
Yeah.
are less micromanagement from the board perspective.
Yeah.
And I feel like we are a good complement to their team. We're not operating
Yeah.
a company, but we have a network that they can leverage.
Yeah. So we're kind of here if you need us. And if
Yeah.
we can help, we're here, but we're not going to kind of overbear. We're not going to be overbearing with that.
Yeah.
Yeah. Perfect. What do you believe sets your firm apart from other VC firms, and how does that benefit the startups that you work with?
Yeah, I feel like it's the network. Again, there's different profiles from VCs, but there's kind of the regionally focused. We are not. We are a nationally focused firm, and we've also hosted the Unmet Conference, which I'll allude to in a second, but we've hosted this conference 9 times in 5 different states. So
Wow.
we've, again, built a really good network nationwide, and I feel like going back to the 2 examples where Blast Point's based in Pittsburgh. We made the strategic connection to the firm in Iowa, OpenTugs in Seattle, the LP's based in New Orleans. And again, this only comes from a national
Yeah.
network landscape. And so I feel like that is one. On the conference side, we've usually had economic development agencies sponsor our conference, and we've had some unique value prop on the back end that's able to be additive to our portfolio. And so Arizona Commerce Authority, Jobs Ohio, Washington Department of Commerce, they've all been, I would say, strategic in a way that we've been able to leverage that for our portfolio companies, but they want to see our help in cultivating their startup ecosystem. And so we've created this conference, one, to help these markets get access to institutional capital. We feel like that's an unmet need, and so that's where the name of the conference comes in.
Yeah. Yeah. Amazing. Amazing. Yeah. And I did definitely want to know more about on that because it sounds absolutely perfect for this for this market. In your opinion, what are some of the biggest challenges that startups face when raising capital, and how do you help them navigate those challenges?
Yeah, for sure. Really appreciate the question. I feel like a lot of firms will point to the storytelling ability to the founder, and I do believe that is incredibly important. But I feel like how does investment catalyze your growth is more of what we are looking for when we have the conversations with startups looking for funding. And again, everyone is looking for a good story where the founder can be the superhero in the story. And I don't want to devalue that. That is important. But I feel like how we invest is, how can $1 million in new investment catalyze your growth? And so we're usually investing at the sales and marketing component of the round as opposed to R&D and product development. But if you can convince or at least elaborate on, hey, $1 million in new investment can drive at least $1 million in net new revenue, it's a very compelling case to get our investment over the line.
Yeah.
And so it's just a shift on what founders are talking about during
Yeah.
the pitch.
So that's really interesting because I've certainly asked this question before, and I don't think I've ever had that before. So what you're saying is that one of the biggest challenges to raising is maybe the narrative that founders lead with, that maybe that's sometimes off, and what you try to do is to help them hone that narrative and be really focused on what this stage actually means.
Yeah, I feel like where we invest is coming off of an accelerator incubator where I feel like the common feedback that founders are given is talk about the story, and they get very good at talking about the story,
Yes.
talking about their previous experience going into why did I create this company. And I think all that is very well intentioned and good. But this is usually getting a company from an idea into a business with early customers. And then I would say fast forward 6 months to 12 months is where we like to invest. And at some point, that narrative does need to shift to say, hey, I've created something that is adding value. We just need more money to get to the next stage. And so you do have to rethink because you're leveling up the company from a pre-revenue company to 1 million in annual revenue to, let's say, 1 million to 5 million. And so what the investor is going to be looking for is going to be different, and it's much more about the business. Again, it goes hand in hand with the founder and the business, but what does an investment do for the business is really is going to be the next chapter for the company.
Yeah. Again, Clay, I mean, I think you make that sound so simple. And I guess the narrative is that, kind of if you're at that seed level, you've got to keep talking about, the fight and the founder journey. But I completely agree. Like, I think that it makes so much sense really to kind of get on that call and the narrative to be, hey, this is what we did, this is where we are, we've got something that's brilliant, that works, we've got a customer base that thinks we're amazing, that wants to pay us to do it. All we need now is some fuel for the fire so that we can make this 10x 20x what it currently is. Makes so much sense.
Yeah, and this goes back to risk mitigation. What can you do ahead of time before you put capital at stake? And I feel like this is a good product to offer to LPs, or at least that's what we think, that is differentiated than our peers that like the VC mystique that comes with this kind of aura. Again, we want to demystify that could drive predictable returns. And we feel like this is a good product to offer to LPs.
I agree. How do you stay informed about emerging trends and industries to identify the most promising investment opportunities? And the reason why I ask this, just to give you some context, is because obviously, especially within the industries that you're investing in, right? You're agnostic, but you're around tech. And I'd imagine, everything's got AI these days and everything's moving so quick. So, like, I know that you're expected to understand this stuff, which is difficult, right? And I get it.
Yeah, I like podcast. I like getting information from sources like this. I feel like for two reasons. One, you get to hear the thought process of VCs or even companies, how they talk about either their products or the investing. And then the second part is I just feel like there is a tsunami of AI generated content out there. I think some of it is good, but I feel like getting it from the source is much better. I think even Warren Buffett only does live interviews because he's worried about his words getting taken out of context. And so just kind of pushing back on the amount of AI generated content out there. And so I feel like podcasts are a good source of information.
That's really interesting because I would tend to agree. I haven't really thought about it in that depth, but I think sort of I'd say even 2 years ago I was reading lots of books, but I don't really tend to read that many books anymore. Again, a lot of the information I get is much fresher and newer on podcast. So I completely get that. Can you share a specific investment decision that you made that didn't go as planned and what you learned from that experience?
Yeah. And so we'll invest in 30 to 40 companies per fund, assuming that even if you have well-intentioned metrics set up, that some companies are going to fail. And so one example is we invested into a returns e-commerce business, and this was during COVID, and it was really a super hot deal. It was very hard to get into, and we really had to kind of fight for allocation in this one. It looked perfect on paper. It still looks perfect on paper, but the company is just not going to work out. And it's unfortunate because I thought it was, kind of perfect across the board. It had
Yeah.
revenue, all that stuff. But ultimately, after a year or two, when things weren't going according to plan, we were able to do some back channeling of, hey, what's going on internally? And there were some red flags that we were unable to find at the time of investments, but we've incorporated some of those into our diligence process now, which is just culture. Again, it's kind of hard to determine, and then a lot of information that we're getting is from the founders, and we want to be able to trust the founders, but sometimes it's not as rosy as they kind of want to make it seem at the time that they're soliciting investment, and so just back channeling to make sure that everything's okay internally from a culture perspective is hard, but I feel like it's our job as investors to do that, at least some of the diligence at the time. So
Yeah, absolutely. And what advice would you give to early stage founders who are looking to raise capital for the first time?
yeah, I would say have a clear plan. It is a full-time job, but I feel like if you can go to a local startup events to find local investors, but asking your network investors that are active in your space. And so if you're a startup in Colorado, maybe some of your better investors are in New York. And so one example of that is we led a financing called Adfontes. They're in the ad tech space, and the company's doing really well. We're super excited about them, but I feel like Colorado is not really an ad tech market for VCs. But the ad tech market is much more in New York because that's where all the ad tech firms are. So it's much more about like finding who's a good fit, and I feel like just because you're in a certain state doesn't necessarily mean your state has the right investors for you, but really leaning on your network to say where are the investors that invest in this type of industry should save you some time, but having a plan ahead of time, we feel like moves the needle. We've seen VCs offer some time to help founders in terms of what VCs are you talking to, where are they from first call, second call, data room, customer calls, and it just organizes the process in a way that saves time, which helps.
Yeah, the location challenge is always there, and interestingly, Clay, what I would say is, I mean, we have a network of global investors, and I would say that the kind of that where the biggest barriers to that are in North America, actually. So actually, it's US investors that are usually quite closed off, and like we only let they kind of put these barriers up. So to hear you say, for example, that your network is national. I think that is one thing that definitely separates you, and also this vision that you have, where we should remove those geographic boundaries, because those geographic boundaries really were imprinted in us probably from, I don't know, maybe the early start of the Industrial Revolution, where people kind of lived where they worked, and so we all had to be in these areas. But I agree with you completely. I think that we've got to take those geographical barriers down and allow people to kind of thrive in whichever environment obviously suits them the best.
Yeah, I feel like there's sense of if you raise money from VCs, it's like a validation point or it is the solution. And even there's some more exclusive clubs that I feel like VCs try to narrow in or box in their network, and I feel like ultimately that's going to hurt them. And we've seen both. I mean, sometimes that if you have the right investor, it can catalyze success, but we've also seen just because a certain investor invested in your company doesn't necessarily guarantee a success. I mean, ultimately it comes down to the business, and does the business make sense? Is ultimately going to be more important than like who are your investors.
Yeah. No, absolutely. How do you envision the future of venture capital evolving, and what implications do you think that will have on startups and the overall investment landscape?
Yeah, it's interesting just with the AI boom over the last 5-10 years. I would say personally, investors are going to go back to the manufacturing or kind of the hard asset investing, or at least that's what we've done internally. We're leading a medical device. We just did a CPG company that is manufacturing in the U.S. Real goods. But I just feel like with AI, there's so much changing so quickly, and I think ultimately it's going to be a race to the bottom on price that VCs are going to have to rethink what they invest in. And I feel like the only sort of defensibility is going to go back to kind of the real businesses, such as goods and services, as opposed to AI for this industry or AI for this industry. There's still going to be winners in those categories for sure. But I think VCs are going to have to think, is it going to be tech forward or is it going to be non-tech moving forward, just with the AI transforming everything? So,
Well, that's a really interesting take on that. It's really interesting because I guess a lot of people would maybe see that everything's moving down this tech route, and that even like your mom and pops type boomer businesses, your engineering businesses, your hardware businesses are all kind of getting dragged into this. But I guess what you're saying there is we still think there's going to be kind of this segmentation of this, and your thoughts are that maybe the VC are going to lean more into that kind of that hardware, sort of arena.
yeah, I mean, we've seen some really flashy AI solutions out there, and they are great, but we've just seen more and more competitors to some of these AI winners. And ultimately, the way to compete, yes, is on service, but then also on price. And if
Yeah, of
someone
course.
in cheaper markets can create an alternative at a cheaper price, it's going to be hard to compete with that. And
Yeah.
AI is just making it more easy to do that than ever. And so I think VCs have to be more open-minded to non-AI solutions.
Yeah. That's
We
really
might be
interesting.
10 years down the road from that, but ultimately, I think VCs, or at least we are thinking about, what is the future of investing during this
Yeah.
AI transition?
Yeah, I mean that is a super interesting point that you're making there, and it leads into something that I've been thinking about with AI and the investment in AI, and a lot of my friends, my colleagues who are investing in this space, because I think what one of the things that I foresee in this is that kind of the window of the investment and the return within these AI kind of this AI sphere is going to be like shrunk right down. Like it's almost going to have to be a case of getting in and then 6 months later getting out, probably before that competitor comes in and then takes the market share, because it feels like it's going to shift so quickly. So I can completely understand that. I mean, what are your thoughts on that? Do you think that's probably about right?
Yeah, no, I think it's right. We spent a lot of time into deep tech specifically, and so these are companies out at NSF research institutions looking to become businesses. But this is like aerospace, this is quantum. We feel like this is going to be the next generation outside of AI that is looking for innovation and capital to kind of move the industries
Mm.
forward. But if you're investing into an AI startup, I would say vertical SaaS is a good spot, or if you have a unique data set, then it's also valuable. But I don't know, it's going to be hard to kind of time the right AI company,
Yeah,
just because everyone's doing that around the country, or around the
amazing.
world. So,
Yeah,
but
so
yeah,
really,
yeah.
it's a
Go ahead.
really insightful kind of take on that. And like I said, there's been a lot of firsts today, Clay, in terms of the way that you see the world. And this is what I love about doing this, is that you can kind of speak to so many different people, and then everybody's got like just a real slight individuality about the way they are. And this is one of the things that we get back most from our founder community, is every time they watch one of these, they're like, oh, I never thought of that, that kind of that track.
Yeah, and again, it's about finding your right investors, because I
Yeah,
assume there's more VCs out there that want to invest in AI than us. But again, it's just finding your fit, and we're just going to be slightly different, but we feel like we kind of have to differentiate ourselves from our
yeah,
peers. But no, I appreciate the conversation.
yeah, yeah, yeah. Amazing. Well, we're nearly done for this session, and I've really enjoyed it. But there is one thing that I wanted to come back to, just because I wanted to understand a little bit more about how they run, how it works, who attends them, etc. But I just wanted to know just a little bit more about these unmet events,
Yeah.
and how they came about, and more importantly, like how does it work? Like when's the next one? I want to know.
Yeah, the next one is in process. We'll announce it shortly. But yeah, so we felt like there was a lot of events and conferences for startups around the accelerator and incubator stage. But once you transition from idea to business or accelerator into the normal market, there's very little conferences that
I
are
agree.
national around that institutional seed and institutional Series A. I mean, I feel like a lot of them exist for regional conferences and they're good, but if you can have a national conference that is able to move within different regions at that post accelerator stage, then it is a unique conference. And so we pitch economic development agencies on filling an unmet need of raising institutional capital in non-coastal markets. And so Arizona, Ohio, Washington, these are areas that are trying to attract more institutional capital to these areas, but we still need to have a national conference that happens to be in their state. And so we usually select about 50 to 60 companies per conference. I would say about half or 60% of the companies are located within that state for that economic impact. And then the rest are, it's almost like a sales pitch to the other conferences. Say, hey, Phoenix would be a great place to open up a second office, or Seattle would be a great place to open up a second office.
Wow.
But we feel like this keeps the conference fresh every time in a way that we can
Yeah.
add new companies. And it's also been, we feel like, a unique conference compared to the status quo. And so anyway, we started the first one back in 2019, and we've been creative. We'd like to do an unmet deep tech at some point, leaning in on kind of the aerospace and quantum that we had alluded to. But we're still in the early planning phases right now. But yeah, but we'll
Okay.
announce whenever the next one's up. So.
Amazing. And so I appreciate that you kind of not set everything up or finalized everything just yet, but have you got an idea when, like roughly when the next conference is going to be?
Probably say spring 2026. It takes about 6 months to plan. It's a pretty big lift for a small team, but I would say spring 2026. Probably in the Rocky Mountain region around deep tech, if I had to guess. Yeah.
Amazing, amazing. Well, I'm super excited about that. If nothing else, I'd love to come out to the Rocky Mountain region and come and see one of those. Great. It's been an absolute pleasure to speak to you today, Clay. It's been quite a long time in the making. I think we're speaking to John for quite a period of time before we managed to actually connect. But I've really, really enjoyed it. Was there anything else that we kind of didn't talk about that you wanted to get off your chest today? You're not like a big sports fan. You're not going to tell us that you kind of support a team that nobody likes or anything like that.
No, I don't think so. I cheer for all the Colorado teams, and
Yeah.
but no, I think we covered everything. I appreciate you having me
Amazing.
on, and excited to hear it once it's out.
Amazing. Amazing. Well, have a wonderful rest of your morning, and yeah, I can't wait to speak soon.